RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
This is QuickBooks Desktop.
Okay.
There is also QuickBooks Online.
Okay.
When you work on QuickBooks Desktop, you create a company and enter transaction, and a data file is created. That data file will be saved on your local computer hard disk. So
Okay.
that is called QuickBooks Desktop. If you work on QuickBooks Online, you create a company and you enter transaction. But in that case, data will be saved on cloud. Cloud means it is the server of QuickBooks himself. So QuickBooks must have a server, and they are storing your data. The benefit of QuickBooks Online is that you can log into QuickBooks Online from anywhere in the world, from any computer, because that's an internet-based application. So you just open any browser, internet browser, go to QuickBooks Online, QuickBooks.com, sign in, and you are logged in. Once you are logged in, you can see all your company which you have created in the QuickBooks Online. Today we are going to learn about QuickBooks Desktop. So this is QuickBooks Desktop Pro. You can see at the top on the blue ribbon.
Yes, sir.
And there is an enhanced version which is called QuickBooks Desktop Premier. And then there is further enhanced version which is called QuickBooks Enterprise. QuickBooks Enterprise, if I know correctly, it is like an ERP package. Very few difference between QuickBooks Desktop Pro and Premier. However, if you create a file in QuickBooks Desktop Pro, you can open the file in QuickBooks Desktop Premier and vice versa. There could be one or two features extra available in QuickBooks Desktop Premier. Otherwise, QuickBooks Desktop Premier and QuickBooks Desktop Pro both are same. So now we are going to create a new company. Suppose you got a new client and you are supposed to do the bookkeeping for that client. So since this client is not in our system, in our QuickBooks Desktop, so we have to create a new company. You can do advanced setup, like you can create the name of the employee, bank, and so many other things. Or you can do an express start. So we are going with the express start. Company name, New Training Inc. Industry, help me choose. So I'm going to choose here general service based business. So why does QuickBooks ask you to choose a business type of business?
Because like every business has certain aspects. Like the nature of a business is different.
Yeah, when the nature of business is different, their presentation in the financial statement could be different. And since their presentation in the financial statement is different, their chart of account will be different. You know what is chart of account?
Oh yes, like the
Yeah, chart of account is basically all your general ledgers. And on that platform, when you go on a chart of account, you can create an account, you can modify an account, you can delete an account, you can group an account. So those are the functions available when you go to the window called chart of account. Otherwise, if you look into the chart of account, you will see all the general ledger which normally appears on your trial balance. But when you go into your trial balance, you cannot modify your GL. You cannot create a new GL. You cannot delete a GL. So that's why we call it chart of account. And when you go to chart of account, you can create account, delete account, modify account. So based on our selection here, QuickBook will automatically populate a chart of account. It will create a basic chart of account for this type of business. For example, if it is a service-based company, there won't be cost of goods sold because we are not dealing with goods. We are only dealing with services. But when you select a trading business or a manufacturing business, QuickBooks will select a chart of account which has cost of goods sold. So click OK. Then company type, it is asking it is a sole proprietor. Sole proprietor means an individual doing a business in his name or in a certain name which he has registered. But for taxation purposes, whatever income or expenses, he will report on his personal income tax. If it is a partnership, then the income and expenses will be shared based on the partnership percentage, and each partner will report their portion of income and expenses on their tax return. But if it is a corporation, the income and expenses will be reported on the corporation income tax return, not on the personal income tax return, because corporation is itself a legal entity, a separate entity from the owner and shareholder. Owner and shareholder file their personal income tax return, and corporation will file their own income tax return, and corporation will pay tax on their profit. From their profit, the corporation usually distribute profit to the shareholder, which is called dividend. So when a corporation declares a dividend, that dividend will go to the shareholder, and then the shareholder will report on their income tax return dividend income. Not for profit, charity, other. So in this case, we are taking a corporation because we have given the name New Trading Inc. When it is a corporation, you will always see at the end of the corporation name, either it should be limited or Inc. Inc means incorporated, limited means limited. But in all cases, what it is assumed that if it is an incorporated or limited, that means liability of the corporation is limited up to their assets. So suppose you created a corporation, you invested $10,000, you started doing business, this and that, and something goes wrong, your customer sues you. And when your customer sues you and says, oh, I use your services, so much damage I got, I'm going to sue you for $100,000. Then they go to the court, and the court will decide that no, the corporation has only $10,000 which you have invested, so they can pay you only $10,000. In that case, shareholder might have their personal asset properties that cannot be touched. But if they are doing business in their personal name, like self-employed, in that case, if there is any liability arises, their liability is unlimited. Their personal assets are at risk. Business number. So here is the business number, 821-657-046. So every corporation will have a business number. This business number is issued by CRA. CRA means Canada Revenue Agency. And when you file your income tax return for the corporation, you use this business number. Individual, when they file their personal income tax return, that is attached to their social insurance number, SIN number. But a corporation, when they file the moment a corporation is created, you call CRA, Canada Revenue Agency, and they will give you a business number for the corporation. When your business number remains the same, but depending on the situation, you may have different programs. Suppose if this corporation hires an employee, then they have to register for the payroll account with CRA. Income tax is automatically there because every corporation has to file an income tax return. Then when the corporation decide to register for GST HST, then they have to call CRA and register for GST HST. So right now we are talking about only 3 cases: income tax, payroll, and GST HST. So all these are called program account, different program account. So there are 3 different program account. For all program account, you need to provide the business number, which remain the same for all the program account. But after the business number, you add an extension. So if it is for GST, if you are registered for GST HST, then you call RT0001. If you are filing anything for payroll, then here instead of RT, it will be RP. RP0001. Business number remain the same, but at the end of the business number, an extension is added. And when you use that extension, CRA understand that this filing belongs to GST HST, this filing belongs to payroll, this filing belongs to income tax. PST or QST number. PST is provincial sales tax, and QST is, there is only one province in Canada, which is called Quebec. And if you are doing business in Quebec, you have to register for GST HST, which is the federal, and then you have to separately register for QST, which is called Quebec sales tax number. So right now, this corporation is in Ontario, so we do not have a QST number. Continue. Now it is asking for the address. So 61 130 Bass Pro Mills Drive, City, Pond Code, Province, Ontario, postal code L1 L A1 A, Canada, phone number 647-692-5677, email info@rkbaccounting.ca, website www.rkbaccounting.ca. Create company. So you see it's creating a company. Basically, it is creating a data file which will have the company name and rest of the things which you add. So right now, QuickBooks is giving an option. Do you want to set up your bank account? Do you have employees so you can set up your employee? Do you want to add your product and services? So let's bank account. So TD, checking account. You can enter the opening balance. Continue. Order check. No. Add products and services. Service. This is non-inventory type, but I choose service. Continue. So let's say bookkeeping services. Bookkeeping service. Continue. Items are ready to be added. Items need to be fixed before they can be added. 0 items are duplicate. 0 items already exist. So there is nothing to fix. Continue. Start working. And then rest of the things we can add later. So you see at the top blue ribbon, you have the company created, new trading company, and your company is ready to work. Now this portion at the top, what this is your home screen. From the left hand navigation, you see this is your home screen. This is something income tracker or something like that, bill tracker, calendar you have. If you want to search any transaction which you have already entered, snapshot, you can have a snapshot which is suggested by the QuickBooks, or you can create your own. Like for example, you want to see what is my customers outstanding, customers aging report, or who are the vendors I need to pay, how is my cash flow, what is my net income so far year to date. Those kind of snapshot you can create. Customers, it will give you a list of your customers. Right now we have not created a customer. Vendor, vendor are the person who provides you services if you subcontract, and if you are in trading business, then you buy materials, goods from your supplier. They are called vendor in the QuickBooks. You can add employee. And you can run payroll. But if you add an employee and run payroll, QuickBooks will charge you extra. If I remember correctly, if you add one employee, they will charge you $5 per month, and every time you run a payroll, then another $2 per month. So suppose if you have an employee, you add an employee and you are paying him monthly salary, so QuickBooks will charge you $5 per month plus $2 per month when you run a payroll every month. So your total cost is $7 to be paid to the QuickBooks for running the payroll. But if you have an employee and you are paying him on a weekly basis, then QuickBooks will charge you $5 per month plus $2 per payroll. So this is a weekly. So hypothetically, if there are 4 weeks in a month, so QuickBooks will charge you 4 times to $8 plus $5, $13 per month. So we have to be very, very careful when we are creating an employee and running a payroll. And then we have bank feed. Bank feed means you have your bank account, you have your business bank account, and most of the bank account, 99.99%, they all have online banking. So bank feed means you can add your bank here. Like if you see online accounts, you have not set up any accounts for online services. Would you like to set them up now? Yes. All open QuickBooks window will be closed temporarily to set up the bank feed services. Do you want to continue? No. So we will do that in next step, or we will learn that later. But overall, you need to understand when you go through those steps. In those steps, in the next screen, QuickBooks will ask you to select which one is your bank. So you select your bank, like TD Bank, CIBC Bank, Bank of Montreal, BMO, Royal Bank of Canada, RBC. So you choose the bank, and then QuickBooks will ask you to enter your banking login ID and password. And once you enter the banking login ID and password, then QuickBooks will try to communicate with your bank server. And when your bank server authenticate that your login ID and password is correct, then bank server will allow QuickBooks to access data. That means your account detail, your account transaction, and they will establish a connectivity. In such situation, what happens that anytime you pay somebody from your bank account, or you receive money into your bank account, it will be automatically come into QuickBooks. Automatically come into QuickBooks. That means QuickBooks will show that this is the transaction has happened in the bank account. But QuickBooks does not know what is the category of transaction. For example, you paid $1,000 to somebody, but QuickBooks does not know whether it was paid to the employee for payroll, or you bought some material, or you bought some services, or you bought some office equipment, you bought calculator, computer, laptop. Those categorization we have to do. What QuickBooks will do through the bank feed, they will bring you the transaction, but we have to do the categorization because QuickBook does not know that this $1,000 was paid for buying a computer or it was paid to an employee. That QuickBook does not know. And even most of the cases we don't know, but when we do the bookkeeping for a few months for a client, then we know, okay, this client has an employee, so this amount must have been paid to the employee. In the bank text, in the bank statement, you see some text, the bank writes that. So bank will write that Amazon. So we understand that, oh, it was paid to the Amazon. So that means they must have bought from some office equipment. We can ask the client to provide the bill and we can cross-check that yes, it was paid to Amazon. Bank text will show Best Buy. So Best Buy is an electronic company here in Canada. So that means he must have bought a computer, or he might have bought something else because Best Buy also sell few other things like musical equipments, dryer, washer, furniture. So in that case, we have to ask a bill from the client, and we can see that what was this expenses. Is it a business expenses or is it a personal expenses? And whether there is, if the client is registered for GST HST, then we will claim the input tax credit. If the client is not registered for GST HST, we will not claim the input tax credit on that. So that is bank feed. Docs, if client provides any documents, you can store here. You can link that. Like for example, the client provided the bill for the purchase of computer. So you can attach that bill here so that whenever you enter, look into QuickBooks and you look into the transaction and you want to find out what was it, you can look into the documents right from here. Reports, you can create different reports. Live community, that means if you have any question or anything, you can go to live community and ask question, or you can view someone has already replied to that particular question. Help, you can search for help. Feedback, payroll again, credit cards. You can attach your, you can link your credit cards here. So these are the various functions. So now we are going to concentrate. This is a blank screen. So now we are going to only concentrate on the home screen. On the home screen, if you see the first before this gray line, enter bill, pay bill, manage sales tax. So this is basically for vendor. You see here that at the top it is saying for vendor. So this is for the vendor bill processing. Then next you have customer, create invoice, estimate. You provide an estimate to customer, create invoice, receive payment. If there is overdue balance, you charge them some charges. If there is a refund or credit, you issue them refund. And the last one is for payroll center, enter time, pay employee, pay liability, process payroll. On the right hand navigation, you have company. Here we were talking about the chart of account, items for services, calendar, and then you have banking. So record deposits, write check, print check, reconcile, bank reconciliation, check register, you can see here. When you set up a company, a new company, you have few things to set up, like does this company deal with multiple currency? Like right now, I'm assuming this company only deal with a Canadian dollar, but if it also have account in US dollar, then you can set up this company for multi-currency. And few other things you can customize. But before that, when you created a company, let's look at how what are the information we have provided in creating the company. In that case, you click on the company tab and then go to company information. So you see here, we created the company name, we entered the address, phone number, email, website, and then you can select the period, year end, first month of your fiscal year and tax year. So when you select the first month is January, then QuickBooks will automatically understand that the year end is 31st December. For all individual, it is always based on calendar year. So all the individual who are doing the business as self-employed, they have to prepare a income statement from 1st January to 31st December, which is a calendar year. And then they have to file their report there on personal income tax return and pay taxes. So that is always being on the calendar year. But if a corporation can choose any date as their year end. So for example, a corporation can choose 15th January as the year end, then their year will start from 16th January. A corporation can choose 5th March as their year end, then their year will start from 6th March to 5th March. So normally when a corporation is created, so suppose hypothetically, if this is the month of December, but suppose hypothetically somebody comes to me in October and tells me that, Raj, I need to create a new corporation. I said, okay, fine, we'll create that. We created the corporation, and then he asked me that what could be the year end. Then we normally suggest that since your corporation was created on 31st October, on 10th of October, so you have 365 days in the future to choose as the year end. So 10th October, normally we will tell them that, okay, your corporation was created on 10th October 2023. So your first year end will be 30th September 2024. So from 10th October 2023 to 30th September 2024 will be a short year. Short year means it won't be 365 days. The reason we choose 30th September, because normally in most of the cases, we suggest to choose a year end, which is end of the month, because normally you get bank statement, visa statement at the end of the month. And there are various other things which normally cut off at the month end. Use that same example here, and we say that our now when we choose the 30th September, then the next year will start from 1st October. First year it will be from 10th October to 30th September, and from second year and onward it will be from 1st October to 30th September. 1st October to 30th September. Tax year October. Now, you can also have tax year separately. That means your income tax filing is done based on October, and you can choose your fiscal year on a calendar year basis or some other type of. So you can have two different options as fiscal year and the tax year. And income tax form use. So all the corporate income tax return file is called T2. USC registration we do not have. It is asking for CRA payroll account number. We are not registered yet. Hypothetically, let's assume that we are registered for payroll. Then we can put here 0001. Now this becomes our CRA payroll account number. You see the account number is same. If it is for GST, HST, sales tax, it is RT 0001. If it is for payroll, it is RP 0001. Hit OK. So this is your company information. Now you need to set up preferences. So let's go to preferences, edit, preferences. What you can do in preferences. So there are so many tabs, but we will touch few tabs. And when you have time, you can look into each and every one. So this is my preference. This is company preference. So my preference, there is no personal preference for accounting. Okay, fine. Company preferences, what? Use account numbers. So when you create an account for traveling expenses, office expenses, you can use a number like 001 is traveling expenses. 002 is office expenses. 003 is depreciation expenses. Normally, I don't use it. Require account, something may be related to this accounting code. Class. So suppose, for example, this is bookkeeping for RKB accounting. Now, RKB accounting file taxes for Canadians as well as in USA. So if I want to track my income or expenses based on what I earn from Canadian tax filing, what I earn from US tax filing. So I can create a class here, USA, Canada. Let's assume we have a client, and that client have two different products. One, they have a washing machine, and another, they have fridge. And they want to track their profitability in expenses, how much money they make from the washing machine, how much money they make from fridge. So in that case, you can create a class, use class, and you can create class, and the class will be fridge, washing machine. Automatically assign general journal entry number. Yes, we don't want to enter a manual number. So whenever you create a journal entry, it will be 1. Then when you create next one, it will be 2, and so on. When one posting transaction to retained earning, normally we do not post transaction in the retained earning. The retained earning is a kind of a master account, a locked account. At the year end, all the profit from the profit and loss account is automatically transferred to the retained earning, so that next year you will have a annual profit and loss account. If transaction, if you're entering a transaction which is 90 days back, so today is like 6th of December 2023, and you are entering some transaction in July 2023, so QuickBooks will warn you. The reason is that because normally what happens that somebody has a quarterly HST filing, sales tax filing. So we have already filed the HST up to 31st March, up to 30th June, up to 30th September. We do not want to enter any transaction, even by accident, into those periods, because otherwise our HST return filing will be off. So we set a warning here, and from that warning, when you try to post the transaction, QuickBooks will show you a warning. Hey, you're posting a transaction in 90 days back. So you need to think about that. Okay, should I post it or should I not post it? Have I already filed the HST return for that period, or what other action you need to take? And even you can post transaction in future, but if it is more than 30 days in future, QuickBooks will give you a warning. So this is for the accounting section. Then same thing you can set up for bills. Bills are due 10 days. You can change it to 30 days. So suppose you are buying something from your vendor, and vendor gives you 30 days term. So depending in general what it is, when you are creating a vendor for a specific vendor, you can assign the due date based on the number of days allowed. But this is for in general. When you are creating any vendor, in general, it will be 30 days if you do not select that option. And if you select, if some vendor is only for 10 days, then you have to go and change it from 30 days to 10 days. Otherwise, normally when you create a vendor, it will automatically populate 30 days. My preferences, there is no personal preferences. Automatically use credit, automatically use discount. So some vendor have given you discount, and by mistake you already paid him fully the last invoice. So discount from the last invoice you can apply to the next invoice. Similarly, if there is a credit available, and you got a new bill from the customer for $10,000, and you have a credit for $200, that credit will be automatically QuickBooks will automatically apply to that bill. And when you select that bill to pay, QuickBooks will deduct that credit amount. Calendar, you can set some reminder. You may change it to bill preferences. Do you wish to save them? Yes. Calendar, you can look into that format and whatnot. Checking desktop view. How do you like your desktop to be to look like? You can change multiple windows, one window. Finance charges, like if your customers are paying late, you can tell them, you can put a message on your invoice. If the invoice is paid 30 days past due, there is 2% finance charge applied. General, you can look into that. There are so many things. Integrated application, if you have any items and inventory, if you're dealing in a trading business or manufacturing. Jobs and estimates, if you're in the business of contractor, where you're fixing window or home renovation, you need to provide estimate. You have contractor, and you can set up all those things here. Multiple currency, so when you're dealing with multiple currency, you can select here, yes, I'm using multiple. QuickBooks will give you a warning that once you set up the multiple currency, you cannot go back to single currency. Now, the only option you can go back to the single currency, that you have to create a new company. But from single currency, you can always switch to multiple currency. No. Payments, payroll employees, some preferences, reminders, reports, and sales and customers, sales tax, HST, E means exempt. Do you charge sales tax? So we need to find out if the client is registered for GST, HST or not. If the client is not registered for GST, HST, then we have to select no. Search, send form, service correction, spelling. When you are typing something in the QuickBooks can automatically check your spelling. Time and expenses. You can go one by one in setting up your company. Depending on your requirement, you have to spend quite a bit of time here. This is one-time setup, and then it will give you benefit for the rest of your life. Okay, so this is pretty much it. Enter bill, you can enter bill here. Vendor, if you don't have vendor, add new. I'm not going to do anything. We will work on this later. Pay bills, once you have entered the bills, you will have the list of bills to pay. You can select that bill and pay to them. Create customer invoice. Normally we don't deal with it because most of our bookkeeping services is based on the historical data. We don't provide customer invoices or all other things. Payroll, yes, we do payroll for employee. We will learn about that. Chart of account, important. So you can click on the chart of account and you can see. As I told you that when you select the industry type, QuickBooks will automatically populate the chart of account. So in this case, QuickBooks have already populated chart of account. They already have telephone expenses, travel expenses, interest and insurance expenses. And if you don't have any, then you go to account here, create a new account, or you can edit account, or you can delete account, or you can make an account inactive. That means when you prepare a report in QuickBooks, inactive account may not show unless it has some numbers. Or when you are entering a transaction and you are typing to search for an account, it will show all the account, but not the inactive account. So the chart of account was escape button. Yes, items and services, calendar, record, deposits, check writes, reconcile, this and that. Then look at the tab. You have the file tab, create backup. This is very important. Once you enter the data, you create backup and take backup, so that if your QuickBook files get corrected, you can restore from the backup. Or even if you want to share the file, suppose client wants the to look into the QuickBooks, so you can create a backup and send it to the client, and then the client can restore from the backup. New company, open restore company, previous company, create copy. You can instead of creating backup, you can create a copy, close company. Print forms, printer setup, blah blah blah. Edit, user register, user calculator, find. This is very important. Find and search. In find and search, suppose you have entered, suppose on the bank statement you saw that $1,250 is paid every month. You saw in the January, 1250 was paid to somebody, 1250. So that means this is a recurring transaction happening every month, and this is the, you are doing the first time bookkeeping for this client, so you can search that transaction in the past and learn that, oh, okay, so this is for rent, because in the previous year it was entered as a rent. So if you see fixed amount, or if you see in the bank statement, a particular text is always appearing in the bank statement, like uh, Excel alphaing, Excel alphaing, Excel alphaing. So you see that this text is also, this text must be in the past year also. So let's search that. And when you search, then you see, oh, these are the transaction, it was entered in this. Search preferences we saw just now. View, there are different types of view. List, you can create list. One of the list is chart of account. Item list, when you have inventory or items. Fixed asset list. Price level list, you can have price level for export prices, local customer prices, province wise prices. Sales tax code, you can create your own sales tax code for a particular province, for a particular customer. Payroll item list, payroll schedule, so many other things. Favorite company, with we saw here QuickBooks information, but there are so many other things. Most of the things we do not use it, but yes, to have a quick look, uh, at least for one time, is good. Make journal entry. From here you make the journal entry. Okay, you select the date, as we told the QuickBook to create the entry number automatically, and then you can debit your travel expenses, $100. You can write memo, taxi from airport, and then cash or TD checking account. You can do save and new or save and close. The transaction is entered. Report, go to profit and loss account, profit and loss account. You have your traveling expenses, $100, and already. And in the report section, employee, then you have vendor tab, employee tab, banking tab, report. This is important. So from here, I run the profit and loss account. If you're looking for any sales tax report, customers receivable and advance AR aging, it can give you aging that over 30 days outstanding, over 60 days, over 90 days. Sales report, jobs and mileage, vendors and payable, employee. When we are doing the payroll, this report is important. Most of the time, we print the PD7A summary. This PD7A summary is the CRA payroll remittance. When we do the payroll for employee, we did the employer deduct the CPP, EI, and income tax, and then employer also contribute their portion of CPP and EI. Now, employer portions of CPP and EI, and employee portion of CPP and EI, and income tax withheld, all those total amounts are to be remitted to the Canada Revenue Agency by the 15th day of the following month. To prepare this remittance, the form is called PD7A. CRA called this form as PD7A, which QuickBooks has also implemented in their software. So you print this form for the payroll, and make sure the moment you see that you are running a payroll which covers the last payroll of the month, then every month we need to print this PD7A and send it to the client and write an email that this is the payroll, CRA payroll remittance for this month, and you need to pay this much of amount, and you have to pay it by 15th of the following month. So that's it pretty much. Any question?
About the multiple currency feature in the preference section, like
Okay.
for example, there's a company and it has only a single currency system, and for for by mistake or for technical error we have clicked in the multiple currency. Now you have mentioned that we can't go back to the single currency once we have clicked on the multiple currency option. So
Yeah.
if that is done, so we have to like delete the company, or we have what happens to the main company which we have created so far? We have to delete all the information from start. Like we have to edit the information from scratch.
Yes. you have to enter the information from the scratch, because you cannot go back to single currency.
Okay.
Or even if you have by mistake, if you have entered multiple currency, and if you do not have multiple currency, what is going to happen? You are not going to use that multiple currency function, but
Okay.
single currency function will also always be there. So suppose
Okay.
if a client has only Canadian dollar bank account, they don't have a US dollar bank account. So we created in the chart of account Canadian dollar bank account, and by mistake we created multiple currency that he has US dollar as well. So it's okay, we created, but we are not going to use that because he doesn't have a US dollar bank account, and we will keep entering all the transaction through the Canadian dollar bank account. Like